Underwriter is a person who agreed to sell the share on behalf of the company. If the firm application has marked application, excluding the firm application. When firm application is treated as unmarked application means no separate treatment for firm application. It is already included. Hello my dear student, I am Dr. B.S. Subramanya, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. Today, in this session, I am going to have Corporate Accounting 1, third semester, Unit 1, Session 5 in favor of BCom regarding underwriting of shares and debentures. This is one of the important chapter which you are doing to deal under company. What do you mean by underwriting of shares and debentures? I am going to explain detailedly. This is a problem. Monica Limited issued 1 lakh equity share of 60 each, A, B, C and D. Underwrite the entire issue as follows. 40,000 share, firm underwriting is 3,000 share. 30,000 share, firm underwriting is 2,000 share. 20,000 share, firm underwriting is 2,000 share. 10,000 share, firm underwriting is 3,000 shares. Total application received from public, excluding the firm application, 60,000 share, which marked. Applications are as follows. A 10,000 share, B 6,000 share, C 8,000 share, D 16,000 share. Determine the liability of underwriter treating firm application as marked application, firm application as unmarked application. This is for 15 marks. So, before going to problem, I will explain what is actually firm underwriting. What do you mean by share here? Assume that when application received from the public, assume that about 10,000, 90% should be collected. How many applications received? Assume that it is 10,000. 90% should be collected, 9,000 from the public within 120 days. As per the Companies Act 2013. When application received from the public for the sake of the share, about 90% should be collected from the company within 120 days. If the money is not collected within 120 days, whatever money we have collected from the public application fee, that should be refunded. What is the total? 10,000. You must collect how much? 90% of that 9,000 should be collected within 120 days. If the amount is not collected within 120 days, as per the Companies Act, money should be refunded here. That's a law. Then, there is a word called firm underwriting. Firm underwriting, 3,000 shares of A is there. We mean this firm underwriting. Underwriter is a person who agreed to sell the share on behalf of the company. When the company is not in a position to sell the share, his friends called underwriter will come on this picture and they will say that we will sell the share and debenture on behalf of the company for a commission that is called underwriting commission. Here the two parties are, one is the company and is underwriter. Underwriter helps the company to sell the share on behalf of the company for a remuneration. The word firm underwriting means they say that I am interested to purchase the share here. A says, I am interested to purchase the share to the extent of 3,000, whether the A says, I will purchase how many shares? He gives a guarantee whether the public subscribe the share or not subscribe the share. I will give a guarantee that I will purchase 3,000 shares. Who says? A say. It's a confidence whether subscribed by the public or not subscribed by the public. I will take how many shares? 3,000 shares. That is called firm undertaking or definite undertaking. Who gives the assurance? A gives the assurance. Same thing goes to B. Same thing goes to C, same thing goes to D. That means, as per the problem, 40,000 share is taken by A. He gives a guarantee that he is going to take the share to the extent of 40,000. Out of that, he says, I am interested in purchasing 3,000 for me. 3,000 share goes in favor of A. What he say that I will confirm 3,000 share will be taken by me. Totally, I will give a guarantee of 40,000 share. Out of that, myself, I will take how many share? 3,000 share. Then B says, I will take 2,000 share. C, 2,000 share. D, 3,000 share. This is a definite share purchased by A, B, C, and D. Now, as per the problem, the total application received from the public, excluding firm application, then 60,000 share, of which mark applications are. Out of 60,000, these are all called marked application. Then determine the liability of the underwriter treating firm application as marked. If the firm application as marked application, excluding the firm application, total application minus marked application minus firm application minus unmarked application. I will give the working note now. When firm application treated as marked application means firm underwriting is taken separately. This word, when firm application are treated as marked application means there is separate marked application excluding the firm application. The problem says application received from the public is how much? 60,000. Out of that application, firm underwriting is going to write how many share? 10,000 share. Then total application received 70,000. Out of that, marked applications. Totally 3 plus 2, 5 plus 2, 7 plus 3, 10,000 is firm underwriting. Here, mark application, A 10,000, B 6,000, C 8,000, 16,000. So 10 plus 6, 16,000, 8, 24, 30, 40,000 is a mark application. 60,000 application received from the public. Add firm underwriting 10,000 share, it becomes 70,000. Out of that, mark application is 40,000 minus firm application is 10,000. Remaining 20,000 is called unmarked application. I will repeat. Total application received 60,000. Add firm underwriting separately because it is not included. Firm underwriting 10,000. Total application received 70,000. Out of that, mark application is 40,000 minus firm application is 10,000. Balance is unmarked application. We'll go with the problem now. Statement showing total liability of the underwriters. Gross liability 40,000, 30,000, 20,000, 10,000, 1 lakh. So that means they are in the ratio of 4:3:2:1. If we cancel zeros, 4 zeros, 4 zeros, it is in the ratio of 4:3:2:1. A has to give a guarantee. 40,000 shares responsibility goes to A. 30,000 shares responsibility goes to B. 20,000 responsibility goes to C. 10,000 goes to responsibility to D. Now, minus unmarked application is 20,000. So, 4 by 10 of 20,000, 8,000 goes to A. 6,000 goes to B, 4,000 goes to C, 2,000 goes to D. So the gross liabilities 40,000, 30,000, 20,000, 10,000, 1 lakh minus unmarked application in the ratio of 4:3:2:1 in favor of A 8,000, in favor of B 6,000, in favor of C 4,000, in favor of D 2,000. The balance is 32,000, 24,000, 16,000, 8,000, 80,000. Now, firm underwriting as per the problem 3,000, 2,000, 2,000, 3,000, 10,000. Balance 29,000, 22,000, 14,000, 5,000. Balance is 70,000. Now, unmarked application totally 40,000 in the ratio of. So 4/10 of 40,000 is, that is unmarked 40,000, unmarked application 4/10 of, this is 10,000 goes to A, 6,000 goes to B, 8,000 goes to C, 16,000 goes to 40,000. This is 4/10 of, this is 40,000. Then 10,000 unmarked application, 10 plus 16, 8, 24, 30, 40,000. So when firm application treated as marked application, total application received from the public is 60,000. Out of firm underwriting is 10,000. Total application received 70,000. Out of that marked application given in the problem 40,000 minus firm application given the problem 10,000. Remaining is 20,000 is unmarked applications. Then we'll move on to problem now. Gross liability, they are in the ratio of 1. So 40,000 goes to A, 30,000 goes to B, 20,000 goes to C, 10,000 goes to D, 1 lakh minus unmarked application 20,000. This is 4/. So 8,000 goes to A, 6,000 goes to B, 4,000 goes to C, 2,000 goes to D, totally 20,000. Now the balance is 32,000, 24,000, 16,000, 8,000, 80,000 minus firm underwriting as per the problem. A says definitely I will take 3,000, B take I will take 2,000, C say 2,000, D take 3,000. So 30,000 will go. This is balance. 29,000 goes in favor of A, 22,000 goes in favor of B, 14,000 goes in favor of C, 5,000 goes in favor of D, totally 70,000 minus marked application as per the problem. 10,000 goes to A, 6,000 goes to B, 8,000 goes to C, 16,000 goes to D, minus 40,000. Balance. Here, the minus figure is the surplus is 11,000. This should be distributed surplus 11,000 among A, B, and C in the ratio of 4:3:2. 4 plus 3, 7 plus 2 is 9, 4. This is 4 plus 3 plus 2. So 4,889 goes in favor of A, 3,667 goes in favor of B, 2,444 goes in favor of C, totally plus 11,000. Now, if we deduct 14,111, 12,333, 3,566, it becomes nil. Add firm underwriting, which has been right separately, definite undertaking. This is as per this is actual, definitely they are taking how much? 3,000 to A, 2,000 to B, 2,000 to C, 3,000 to D. So total liability of underwriters 17,111 to A, 14,330 to B, 5,556 to C, 3,000 to D, totally 40,000. Means here, if you see the problem, out of 1 lakh, how much application is given? 60,000. What's the balance? 40,000. So This is a responsibility of the underwriter to write a 40,000 share. So this is one statement. Now, when firm application is treated as unmarked application means no separate treatment for firm application. It is already included. What is the total application received? 60,000. Add firm underwriting 10,000. Totally 70,000. Out of that, marked application is 40,000. Unmarked application is 30,000. So we should not show separately firm underwriting. It is already included. You go with the problem. Gross liability 40,000, 30,000, 20,000, 10,000, 1 lakh. Minus unmarked application 12,000, 9,000, 6,000, 3,000. This is 4 by 10 unmarked distributed according to the gross liability ratio 4:3:2:1. What's the balance left over? 28,000, 21,000, 14,000, 7,000, 70,000. Minus mark application as per the problem 10,000, 6,000, 8,000, 16,000. The balance is 18,000, 15,000, 6,000 and 9,000. This is a minus figure. Surplus of D 9,000 should be distributed among A, B, C in the left-out ratio. Your ratio is A, B, C 4:3:2. So it goes 4,000 to A, 3,000 to B, 2,000 to C plus 9,000. What's the balance left over? 14,000 to A, 12,000 to B, 4,000 to C, nil. We have to add back firm underwriting because separately underwriting of A 3,000, 2,000 to B, 2,000 to C, 3,000 to D, totally 10,000. If we add 17,000 to A, 14,000 to B, 6,000 to C, 3,000 to D, totally 40,000. This is the total liability of underwriter when firm application is not treated separately. When firm application treatedly, first one. So totally 15 marks question we have answered. So here in examination for 15 marks, 1. When a firm application treated separately, when firm application is not treated separately, both the type will be asked. So we have solved that point here. So one is treated separately firm underwriting, not treated firm underwriting separately. So both the type I have solved the problem. So I think you understand this problem. We'll have some more problem in the next session. Till then, goodbye. Meet in the next session with some more problems.